Welcome to Piece by Piece, a business podcast by Lumbermens. In this episode, we talk about what it means for a company to be employee-owned. Here's Ryan Terpstra, joined by the president of Lumbermens, Steve Petersen. Welcome back to another episode of Piece by Piece. This is a business podcast by Lumbermens, and we are joined by a new guest this week, the president and CEO of Lumbermens, Steve Petersen. Steve, thanks so much for sitting down to have a conversation.
Looking forward to it.
I know you've been a little jealous of Sean, probably, getting to chat. Little business stuff here. We thought we'd bring you in because Lumbermens is an employee-owned company. I think people get that by looking at the sign if they're watching the video version of this podcast.
Right.
But someone like myself, when I joined a few years ago, I did not really understand what an ESOP was. And we thought it would be a great idea to bring you in to talk a little bit about what that structure looks like, what that means for the company from a leadership perspective, from an employee-owner perspective, and then that relates to company culture as well. And I think this day and age, company culture is a big topic.
Absolutely.
Among everybody.
Yeah.
So,
and particularly at Lumbermens.
Yeah. Why don't we kick off? I talked about my experience coming into the company. When did you come in? What was your previous experience with an ESOP? And what did you have to kind of learn as you were brought into what an employee-owned situation looks like for a business?
So I joined the company in '96. At that point, we were partially owned by an ESOP. So our ESOP employee stock ownership plan started in 1990. And it was 3 transactions before we became 100% owned. That happened in '98. So I was here for the last 2 transactions, one being in '96, the other in '98. And I had experience with ESOPs. I came out of the public accounting, finance background. Actually had done work. Lumbermens was a client of mine, and I had a few other ESOPs as well. So I'm definitely familiar with the mechanics of an ESOP, I'll say. There's a lot of layers to ESOP, and one of your questions was, what have you learned? And what I've learned, and even most recently, is that an ESOP at its basic form is a retirement plan. But when you actually start peeling back the onion, it's an ownership structure that allows for the employee's daily work experience to be different. And that's where the real power of an ESOP comes from, in my opinion. So an ESOP, again, employee stock ownership plan, it is an ERISA plan, so it's a retirement plan. So there's all kinds of regulations and things like that. Department of Labor, IRS, has interest in how those plans are run. It's often used as a succession plan for the current ownership, and that's exactly what, in our case, happened. The founding family began selling the company to this ESOP plan. So, the idea, the basic premises is that there's annual contributions into the ESOP. The company is valued every year, and so ideally the stock value is growing every year, and so that multiplies over an employee's work life with Lumbermens to provide for a nice retirement. So that's the basics of it.
Excellent. So what are some of the advantages?
There's really 3 parties there. There's the current owners, the company, and the employees, and there's advantages to each of those. So it provides a great path for an owner to say, I really care about this company, the employees in it, and kind of the legacy, the culture that's been built. And so it pains me to think about turning this company over to some other company to just do with it what they please. So a really good alternative is to say, hey, let's turn it over to the employees in this ESOP. So I think that's a big advantage, as well as the financial and tax advantages to an owner. From a company standpoint, I won't get too deep into the tax laws, but if you're structured as a S corporation, there are significant tax advantages to the company that becomes 100% owned by an ESOP. So that certainly is one aspect of it. The other aspect from a company perspective is, what does it look like to have a more engaged workforce, right? So we'll delve into that deeper, I'm sure, as we go. The third piece, the employees, the employee owners, lots of advantages there. We talked about the retirement piece of it, and a well-performing ESOP is going to provide a very nice retirement benefit. The thing that I think is not talked about nearly enough, and I'll even be honest that for several years that I was with the company, we didn't really focus on this, but the ownership structure, being owned by an ESOP, being owned by the employees through an ESOP, allows companies to make different decisions in certain situations than probably what would be made if they were owned by, an equity investor, another company, or even a private family or individual. All of those owners are, for the most part, I'll say financial owners. They're owning the business in order to get a return on that investment, right? And it's important, even in an employee-owned environment, to make sure you're performing well financially, but you're able to make decisions in certain situations that just are the right thing to do, the best thing to do for the employees and their families. COVID was a perfect example of that. So Lumbermen's made decisions in COVID in terms of how we came alongside employees that were vastly different than many companies. And it was because, while we knew some of these decisions, might have negatively impacted the bottom line in the short run and perhaps even impacted our share value, it was the right thing to do for the employees, and after all, the employees own the company. And so, that's an example of a fairly significant thing that was done differently for the employees. But even on a day-by-day basis, thinking about what is the experience of a employee at Lumbermen's, their daily work experience. And if you think about it properly, an ESOP structure can allow that experience to be vastly different.
So you did mention that the company has a valuation.
Correct.
And I think maybe when you get into an ESOP, you're just like, all right, it's whatever number pops out at the end of the year.
Right.
But how is that share value evaluated? What goes into that?
Yeah, great question. And it's a complicated process, and it is done annually by an outside independent valuation firm. And really two things drive valuation. One is the current year results. So the year just finished, how did the company perform? And then you take that performance and you look at other companies within our industry that are publicly traded. So there's a public market, the S&P 500 that establishes, on an open market, a share value. So you can take relationships from that public market of earnings compared to share value, and you can take that relationship and then apply that to our earnings and kind of derive a share value. So that's one method. It's called the market comp method. That's kind of a quick and dirty valuation method. The other piece, and the one that is probably the most theoretically correct, is to say, what is this company going to do in the future? What cash flow is this company going to generate in the future, and what is that cash flow worth to us today? That's the theoretically, ultimate, value of a company, is how much cash is it going to produce, and what's that cash worth today? So in that regard, we do a 5-year forecast with the best information we have at the time, forecasting profits and cash flow. And then from there, there's lots of formulas that kind of bring that beyond 5 years into perpetuity, essentially. And then you look at what that cash flow is and what that's worth today. And that becomes the value of the company, and you divide it by the outstanding shares, and that's the share value. And then you take an average of those two.
And those share values turn into high values for our long-term employee owners. I mean, I know you have plenty of stories of people whose retirements have really changed the trajectory of their lives because of how the company has performed.
Absolutely. So if the company is performing well, Lumbermen's is blessed to have done that over the years. It's really about the longevity that somebody's with the company. So if you look at, let's just say a truck driver that's been with us for, say, 30 years, it's a little bit like the reverse of a mortgage. It kind of starts out like this and then, starts really ramping up. So the more shares that get allocated to you, which happens through an annual contribution that the company makes, it's like a retirement contribution, just like any other profit sharing plan or whatever, we make a contribution into the plan. Those dollars are used to buy shares, and they get allocated to each of the employees' accounts. And then so over time, you get more and more and more shares. And then over time, as the share value goes up, 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 it becomes this, multiple effect of what that can do. And so the longer you're with the company, the more you're going to have. And so a long-term employee, a 30-year employee, we see seven-figure retirement numbers, which is really exciting.
I mean, that's a great story to tell. And when we have that financial investment and return from the company, that helps with employee motivation, commitment, longevity to the company as well.
Yep.
You are motivated to stay with it. How have you seen the ESOP structure help with those employee retention, employee motivation aspects?
Yeah, we typically say that when somebody's been with us 5 years, in that period of time, they've starting to experience the power of the ESOP. And so you start, in that 5th, 6th, 7th year, you get an annual ESOP statement, and you start seeing that grow, right? And so at that point, it really impacts somebody deciding to stay with the company. If you're a younger person, early 20s, not thinking about retirement, and you've been with the company for 2 years, you get your ESOP statement, and there's not a lot of dollars there. And, this labor market that we've been through in the last few years where, you've been able to go find another job for $1 more an hour, it takes a lot of education to that young person to say, hey, this is what this could look like. Understand that it doesn't look like much now, but this is what it can look like. Sometimes that can be, a challenging, conversation or sell, right? But again, somebody that's been with us long enough to begin starting to see that, they can definitely appreciate what that can grow to. And it does two things. One is it encourages people to stay with Lumbermen's, but we talk about employee engagement, and I think it really ramps up employee engagement.
Thanks for tuning in. Join us next time for part 2 of our conversation with Steve Petersen about creating a great company culture. This has been Piece by Piece, a business podcast by Lumbermen's.